All right, let's get into it. Today, we're diving into a really big shift that's happening in the world of fintech. You know, the days of just pure hype-fueled growth, they seem to be fading. And what's taking over is a new era that's all about actual, sustainable business models. We're going to look at how three of the major players, Block, Chime, and Wise, are dealing with this new reality.
Okay, so let's just break this down. The entire mood has changed, right? Not that long ago, the whole fintech conversation was about explosive growth, speculative bets, the whole to the moon thing. But now, the conversation in boardrooms and on earnings calls sounds a whole lot more like, hey, can we get profitable, please? It's a massive pivot from all that frenzy to just solid finance.
You can honestly describe the whole fintech cycle lately as a kind of reality show. And in this season's main plot, the characters are all rediscovering the importance of, core business fundamentals. That wild child phase, yeah, it's officially over. Now it's all about building a business that's actually going to last. So let's jump into our first case study, Block. The company behind Cash App and Square is having what I guess you could call a mid-career epiphany. They're trading in all those ambitious crypto daydreams for a pretty solid dose of fiscal adulthood.
The company's latest earnings report really sent a clear signal to the market. Yeah, revenue's up, but the real story here is a huge strategic shift. They're moving away from chasing volatile trends like Bitcoin and instead are doubling down on making the connection between their two powerhouse platforms even stronger.
Now check out this number, 58 million. That's how many monthly active users are on Cash App. That is a huge, stable user base. But instead of just pushing more crypto transactions inside the app, Block is now asking a much smarter question. How can we get these millions of users to connect with our other major ecosystem, Square?
And you can really see that shift in focus when you look at Square's payment volume. That's the total value of all the transactions they process. See here? Larger, more stable mid-market merchants now make up 45% of that volume. That's up from just 41% a couple of years ago. It's a super clear strategy to bring in more established businesses that, provide more predictable revenue.
So the crucial point is really summed up right here in this message from CEO Jack Dorsey. The new mantra is connecting ecosystems. It's a pivot away from these high-risk bets and toward a much more sustainable model of cross-selling services between their massive Cash App user base and their growing network of Square merchants. It just makes sense. So the big lesson from Block's new playbook is pretty simple. While being the cool crypto-forward company got them a lot of headlines, building a real integrated ecosystem of services, well, that's what actually pays the bills and guarantees stability for the long haul.
All right, next up we've got Chime, and they are taking a radically different and honestly a pretty fascinating approach to growing up. They're not just tweaking their business model, no, they're handing the operational keys right over to artificial intelligence. Chime has gone completely all in on AI. They've overhauled their entire operation. They ditched their external creative agency, and now they're making ads in-house with tools like Midjourney and Runway. And what's even more striking is that AI now handles about 70% of all their customer support chats. And the results, they're just staggering. Look at these savings. By automating, Chime has slashed its support costs by nearly 60%, and they've cut down on repeat inquiries by half. For a digital bank where operational efficiency is absolutely everything, these are just game-changing numbers. But here's the part that'll really blow your mind. You'd think that automating support would just frustrate customers, right? Wrong. Chime actually saw its customer satisfaction scores increase by 40%. It turns out that for a lot of common issues, efficient and accurate bots can actually deliver a better experience than an overwhelmed human agent. Who would have thought? So the takeaway from Chime's story is really clear and powerful. AI is no longer just some neat feature or a little sidekick. It has become the core operational engine for hitting that efficiency and scale you need in the modern fintech world. Okay, let's move on to our final player, Wise. This London-based money transfer giant is looking across the pond to the US to fund its next massive chapter of global growth. This is a story of ambition on a truly global scale.
Now let's be clear, Wise is already a titan in its field. We're talking 16 million customers across 170 countries. They move over $150 billion every single year. These numbers are huge, they establish their dominance, but the company knows that to get to that next level, they need something more. And that something more is access to the deepest, most dynamic pool of capital in the entire world, the American financial markets. So Wise is actively gearing up for a New York stock market listing by 2026 to fuel its expansion and really compete on a larger stage.
This analogy just captures the whole thing perfectly. It's a huge leap. Listing in the US, it brings way more visibility, access to way more investment, and a chance to be valued right alongside the American fintech giants. But, it also brings a whole new level of pressure and scrutiny.
The crucial point here is a big lesson for any global fintech with massive ambitions. You can build a great company anywhere, for sure. But for that ultimate growth, that ultimate scale, you eventually have to go to the world's largest capital market. You have to list where the money lives.
Okay, so we've looked at 3 very different companies, each with a really distinct strategy for maturing. Let's bring them all together now and try to understand what the new playbook for success in fintech really looks like.
This table really just summarizes the journey each of these companies is on, doesn't it? You've got Block, moving from those speculative crypto daydreams to solid ecosystem building. You have Chime, trading expensive agency sprawl for just ruthless algorithmic efficiency. And then Wise, evolving from a London darling into a company with some serious Wall Street ambition.
Ultimately, all 3 of these stories are pointing to the exact same conclusion. That wild child phase of fintech, it is definitively over. The companies that are thriving are the ones that have learned a fundamental lesson. Real revenue, healthy margins, and engaged users will always beat speculative hype in the long run.
And all this leaves us with one final, kind of provocative thought. As this whole industry matures, as it becomes more streamlined, more automated, more focused on the bottom line, who really comes out on top? Is it the customer who's getting faster service? Is it the company building a more profitable business? Or is it the algorithm quietly becoming the new backbone of modern finance? Something to think about.